All right, good morning, good afternoon, and good evening. My name is Sophia Arend, and I'm the Global Blockchain Business Council Senior Analyst. It is my pleasure to welcome you to the GBBC Virtual Members Forum. This is a bi-weekly webinar we host showcasing the innovative work of our members around the world. And today we have the pleasure to be joined by Tim Grant. He is CEO of Six Digital Exchange and a GBBC board director. He will be presenting on the path to a global regulated digital market infrastructure. Before we begin, I would like to briefly introduce Tim. So Tim joined Six Digital Exchange, also known as XDX, in March 2020 as head of business. He brings more than 20 years of deep technology and management expertise across institutional capital markets and enterprise blockchain business to the company. Prior to Six Digital Exchange, Tim worked at UBS O'Connor, UBS Investment Bank, R3 Lab and Research Center, and DrumG Technologies. In his previous role at DrumG, he was responsible for the delivery and operations of enterprise-grade distributed ledger solutions for financial services. We are so pleased to have Tim here with us today, and we welcome your questions at any point during his presentation and during the webinar, so you can submit them in the Q&A box at the bottom of your Zoom screen, and we'll take them following his presentation. Without further ado, I will hand things over to Tim to get us started.
Thank you, Sophia. A very good morning, good afternoon, or good evening to all of you, wherever you are in the world. Really great to be here. Thank you to Sophia and of course to Sandra, our indomitable leader at the Global Blockchain Business Council. Delighted to be on the board of directors of the Blockchain Business Council, and we're doing some really great work in advocating for the evolution of this space. But here today, I'm going to tell you about Six Digital Exchange. So we've got about 40 minutes. And I'm going to move pretty fast. So hopefully you've all had your caffeine hit either after breakfast or after lunch, because I'm going to move quite quickly through what I want to talk about today. I've got a lot of ground I'd really like to cover. So today I want to talk about the path to regulated global digital market infrastructure. In the next 40 minutes, I want to take you on a journey from the inception of SDX. I want to tell you a little bit about Six, and I want to tell you what we're doing now, what SDX is supposed to be doing in the future. But crucially, at the end, I'm also going to hit on some ideas that I think might be interesting for everyone to think about and maybe demystify a little bit. Having been in this space for 5 years, there's still a lot of open questions about blockchain and digital assets. So let's see how we do today. Now, where I'm going to start, let's find out where I start. Here we go. So, introduction to SDX. I'm going to talk about our roadmap and then these ideas, and we'll try and end with some Q&A. So, what about SDX? Well, firstly, let's start with me. Sophia was very kind to give you a history. The reason I put this up is I want to kind of make one very important point right out of the gate, which is if you look at my history, if you read it a certain way, you'd think I was really just in capital markets, and I have been in institutional capital markets my whole career. But you'll see I've kind of gone from the business side to the technology side, back and forth. And in fact, the way I see it, there's no difference. Business is technology, technology is business. In the 21st century, business is not just supported by, it's not just a cost center. Technology is not just a cost center for business. Business is actually powered by technology and completely a part of it. And that's a theme that will keep coming back. You can't dissociate the two. I spent a lot of time on the trading floors of UBS, but during the time I was there, I was building an analytics product with my colleagues called UBS Delta. So we had developers on the trading floor, which at the time was very unusual. And that's the way it should be. The future state is business and technology all mixed into one. The breaking down of silos and barriers is a theme that I will keep coming back to. But more recently, after my last role at UBS on the hedge fund side, I spent the last 5 years in this space. So this has been a really fascinating journey. And it's quite exciting to come to you today and tell you about how we're making things happen, because we've been waiting for a long time for real things to happen in this blockchain and digital asset space. And now it's really happening. And there's lots of great stuff going on around the world. Now let's talk about SDX. SDX came into being 2 years ago in the summer of 2018. The picture at the top is our CEO, Jos Dijsselhoff, a wonderful Dutchman who is really leading Six into the 21st century at this point. And at the bottom is Tom Zeeb. Tom is the head of securities and exchanges and really has a a lot to do with the SDX project, and in no small part drove the beginning of this. You really need to make a bold bet if you're going to do something like SIX Digital Exchange. And so 2 years ago, we came out and we said we were going to launch a fully end-to-end, fully integrated digital asset trading, settlement, and custody service. That was the North Star 2 years ago. Now, it's worth stepping back and taking a little bit of context here. What is SIX Group? Well, SIX, which now includes the BME, the Spanish FMI. Now, so we have two markets. We have the Swiss market and the Spanish market. We run financial market infrastructure, and that includes in Switzerland, we've got the stock exchange, we've got the CSD, we've got a financial information business, but we also run the payment rails for the Swiss National Bank, which is quite important. Now in Spain, we also have the exchange and the CSD. So we are one of the biggest FMIs in the world, a top 3 in Europe, top 2 depending on which metrics you choose. So we are a real player, and certainly with ambitions to continue to grow and operate outside of our home territory. And the idea was, and this is the extraordinary bet that was made, well, let's if we believe that digital assets and DLT are going to be a material part of the future state, let's not wait for that to happen. Let's be a pioneer. Let's get on the front foot. Let's put a lot of time and a lot of money and effort. Let's make all the mistakes you need to make when you're doing something new like this. And let's build that infrastructure in parallel to the infrastructure we run. And one day, and this is explicitly the plan, one day, somewhere down the road, and we're talking 5, 10, 15 years from now, that may become the new infrastructure for the whole group, the digital asset and DLT infrastructure. Now that, when you just think about it, that's an extraordinary bet for a company like SIX Group, a very large company, to make. But that's the bet that was made. So that's the starting point for all of this. Let's go and build this standalone infrastructure. Now, before I say anything else, I just want to make one point. We're talking about digital assets here. We're talking about regulated digital assets. This is for institutions that require and need regulation, the largest financial institutions in the world. And the holy grail is global liquidity, right? The whole story here is about global liquidity. We need to get to a point in the future where the liquidity pool isn't separated by jurisdictional differences or time zones. We want to get to this holy grail of truly accessible, democratized global liquidity in the institutional space. That's what we're aiming for. But let's talk a little bit more about our mission and vision. So beyond just liquidity, the vision for us is to generate global financial market ecosystem that empowers everyone to translate their ideas into impactful commercial realities. Now, there's a couple of words there. Empowers everyone. So we're not just saying companies, we're actually saying governments, corporations, and individuals. And to translate their ideas into commercial realities. So instead of thinking about we're going to build an infrastructure, we're thinking we're going to build the capability for everyone to be able to do something in a faster, better, cheaper way. And to do things they've never been able to do before. Now, if you turn to our mission, and the words here are really specifically chosen to tell a story. We will work together with you to build the bridge to the financial market ecosystem of tomorrow. We're revolutionizing the world's capital markets, enabling everyone to create, exchange, and own digital assets. Again, everyone being the operative word. By building and delivering innovative technology in a trusted and secure way, which is important. Trusted and secure is the bar. We empower our clients to create new business models, products, and services, new business models, products, and services. And crucially, we're doing that today, not tomorrow, we're doing it today. So this is our vision and mission. It's a grand ambition, it's a grand mission. But let's just, before we launch into this, finish on one kind of words to live by, one of my own mantras, which is grand ambition, big impact, small steps. i.e., let's do something big, let's do something bold, let's do something meaningful, but let's do something that has impact, but let's make sure we do it in incremental steps. This is too big to do in 1 quarter, 1 year, even 5 years. This is a 10, 15, 20-year journey. Let's think of it that way, and let's make those small steps count. So let me tell you a bit about those small steps. Now, why would we do this? Well, there are several factors that are shaping capital markets. Most of you, I'm sure, who are watching will be well aware of this. Now, let's just talk about them, though, because they are important. Now, technological change is accelerating. There's plenty of literature to say that the rate of change of acceleration of our move into the digital age is increasing. And COVID certainly seems to have given that a little bit of a catalyst to that. So, firstly, that. Secondly, that means that competitive dynamics are increasing. We've seen it in other industries, and in financial services, we're starting to see it, especially now. We're seeing the boundaries blur, new entrants into the marketplace, old entrants being defensive, new entrants being aggressive and disruptive. That's getting more acute in our marketplace. And you'll notice at the bottom, there's some sources. You know, this is, I tend to read a lot in the academic world about this, because you've got to go back to first principles. And a lot of this has been seen in different marketplaces before. There's a famous article by W.B. Arthur in the Harvard Business Review, which talks about increasing returns and how products and technology can really magnify the advantage for companies. So this is a real empirically observed dynamic, that if you get ahead using technology, you actually create incredibly strong markets, and you can lock in a sort of monopoly of the future, as I like to call it, with increasing returns. So there are major strategic and commercial reasons to be quick and be a first mover. Obviously, we know lots of things are being automated, and this technology is no different in terms of allowing that. But the last one I want to point at the bottom, maybe the most important one, this is really well known in other industries, but not very well known in ours. The theory of building multi-sided platforms. Now, you'd think exchange groups would be really, really good at that, but exchange groups tend to be companies that were built in the last century, in the 20th century. Most of the people running them didn't start those marketplaces. So the theory of building new marketplaces is actually not that well understood, I would contend, in financial markets. It's our job to understand that and build these new marketplaces. So that's what's driving the formation of something like Six Digital Exchange. But as an exchange group, you've kind of, the way I see it, you've got three options at this point. If you're one of the big FMI exchange groups in the world, if in light of these changes in the marketplace. First, option one, just be defensive. Accept it, but don't do anything about it, and see if you can hold on for dear life. You can imagine, I don't think that's a particularly good way to do it. Option two is you actually leverage the technology and you go beyond to the B2C. You actually go straight to the customer. Now, ICE has done this with Backed. They've done it very well. I've got great respect for what they're doing at Backed, but it's a very B2C model. Six is user-owned, user-governed. We're owned by banks, so we're not going to go to their clients. That's not how we operate. We're going to stay B2B. And option three is to evolve your B2B franchise. And that's what this is about. Six Digital Exchange is here to help evolve Six Group to the next generation of what we call digital market infrastructure. So that's the option we've chosen. That's the option Six took 2 years ago. And the ultimate pieces of the puzzle, which will allow us to win, is one, driving new business models, acknowledging that new business models are going to come out of all of this, and increasing the margins where that makes sense and locking in new markets. Two, global liquidity, not just local liquidity, global liquidity. That's what everybody wants. That's good for the marketplace. And three, achieve network effects. That is the 21st century way. That is the building of multi-sided platforms. That's how we're going to go and do this. So let's start to dig a little deeper. What does that mean in terms of those products and services, that B2B franchise? Well, there's a new processing paradigm. This mutualized infrastructure that is DLT allows us to do all kinds of things that we couldn't do before, and it also allows us to break down silos. Two, we've got new types of assets. Digital assets have given us cryptocurrencies, but there is so much more to come in terms of the new types of assets we can create. And we're seeing a lot of cool stuff coming out at the moment this year, actually, of just new advances in that space. New markets. The lack of jurisdictional difference. I keep saying that, but it's really important. Breaking down silos so we can go across jurisdictions and start to tap into that global liquidity. New products and services to go with these new business models. And for us, operational leverage. If we get there first and we build SDX first, we're in a position to go and do SDX many more times around the world. And that's exactly what we plan on doing to create global liquidity. So, and I'd probably worth pointing out the headline, the blurring of the lines between regulated and unregulated infrastructure. That trend is only going to continue as the technology allows us to go across these boundaries. And it's going to be expected that your unregulated infrastructure is as trusted and secure as your regulated infrastructure. So from our perspective, who better to provide that than SIX, who are very, very good at this in the new paradigm, of course. So we today in a traditional model and other FMIs have existing capital markets products and solutions on the left-hand side of that chart. The right-hand side is where we're going. The digital model is digital bonds, digital equities, digital assets, IDOs, we call the new word, initial digital offerings, and new asset classes that we had hitherto have not been able to be traded or haven't been liquid. That's the world we're in. That's the world we're moving to. So it's new incremental revenue for our group, but it's enabling SIX to move into this digital world. That's what this is all about. Why would Jos and Tom and the board of directors of SIX make this huge strategic bet 2 years ago to have us transition to this new digital business in a controlled way? So what are we actually doing? Let's get to the brass tacks. Well, we're building a fully integrated stock exchange and CSD, ready to compete in international key markets. We've got a trading system that's the same one that's used in the Swiss Stock Exchange. There's no point building a DLT version of that. It actually doesn't give you any efficiencies. So we're using the NASDAQ technology that we already use. So it's full investment, in institutional grade technology and matching engines. Centralized limit order book with distributed ledger technology to enable integrated trading. New market models. We have to think about new market models. We have to be flexible. We've seen that in the new, like the crypto market's a great example of that, and the potential to do atomic settlement if we get there, which we'll see when we get there. Market surveillance of the highest possible caliber, like we use in the Swiss Stock Exchange, trusted and secure. Market data publication directly into what we do at SIX already through our financial information business. The first regulated CSD to distribute holding of assets on DLT, where the members hold their assets under their private key. That at institutional level is still the prize. The first company in the world integrating tokenized Swiss francs backed by deposits at the Swiss National Bank, in enabling DVP, digital asset versus payment. We'll talk more about that in a second. Et cetera, et cetera. You get the idea, right? We need to build a fully institutional, regulated digital asset stack that the biggest institutions in the world can engage with in a trusted and secure way. So from 2018, and it's been a long road, this takes time. Remember, grand ambition, big impact, small steps. We started with the build up 2018-19. We've got a fantastic group of about 140 people in New York, London, Singapore, and of course in Zurich, which is where we're based. A wonderful group of people who work at SDX, a very talented team who've built a foundation. Now, 2020 is when we really validate what we've been doing. We're working with big institutional clients to demonstrate how this will work. And obviously, we're working on our regulated status. Next year, we will launch. Next year, you will see products. Next year, you will see liquidity beginning to form, clients onboarding. And next year, you will see us go outside of our current territory in Switzerland and go beyond that. So that's what's to come, all to our vision, next generation global financial market ecosystem that empowers everyone to translate their ideas into impactful commercial realities. Now, what does it actually even look like? Let's go one step further, right? This is one way of representing the world we're building. Firstly, we got to build the exchange and the CSD. And so here's an example of kind of how that would look from a network perspective. And obviously we have Notary. Note that we build on our CSD on R3's Corda technology. So that's the DLT that we're using, a wonderful partnership that we have with R3. But as I'll talk about later, we don't anticipate that's the only blockchain or DLT that we'll be engaged in, because we have to think bigger than that. As a bridge, network as a service. So this notion of regulated, unregulated that I mentioned before, they should all fit seamlessly. This is networks of networks. We're already thinking of how we're going to build that and working with clients on designing that network as a service layer, which itself connects to the rest of the world. So, you know, other DLTs, other blockchains, and lots of the traditional venues that we've seen, and lots of traditional FMI elements that we will connect to. And then finally, the non-bankable asset element. All those things, all those assets that we've traditionally not been able to trade, real estate, art, collectibles, insurance, you name it. All of this is the world that we're building. And that's why when I say the grand ambition is going to take multiple years, we're not going to get this done by next year, I promise you. But we are moving in an arc towards this outcome of the CSD and the exchange in multiple locations, the network as a service, non-regulated infrastructure, and then allowing us to ingest and trade those non-bankable assets. So where are we today? Let's just give you an update on where we are now. Enough of the big picture stuff. So first thing first, we got to build a foundation. You got to build the technology. You got to build a platform. It's got to be operational. It's expensive to do. We're not building a proof of concept here, and we're not building this for retail markets. This isn't a website you knock up over a weekend. This has taken 2 years, and it's going to take more years to build out this level of robust infrastructure. And crucially, we're breaking new ground here. We're breaking new ground. So we're doing things that have never been done before. You've got to make mistakes along the way. And so that's the technology foundation, but then you need to get regulated, and I'll talk about FINMA in a second, and then you need to talk about the central bank digital currency piece, which of course is important to really unleash the value. So that's your foundation. Next, and I put UBS and Credit Suisse here, they're the two biggest shareholders of Six Group. You would imagine that we'd be working closely with them, which we are, but we are working with many other banks, both in Switzerland and around the world. We're also working with other financial institutions as well. But we need to get to the commercial part. We need to get to the part of actually having assets that trade, that people want to trade. There's no point building infrastructure. People won't come unless you have assets that they care about. And then finally, we've got to think about the ecosystem, that network. We really have to design that. We have to think about how that's going to be designed. This isn't the 20th century. You've got to think ahead to this in the 21st century. So that's the steps we're going through. And in 2021, you'll see us going into that second step, these product initiatives. And then we go into 2022 and beyond, you'll see the ecosystem start to build up. So let's talk about regulation. We are very lucky in Switzerland to have a very forward-thinking regulator. They are very much on the front foot. They're taking this journey with us, which is exciting. They see us as important for the jurisdiction. They see us as important for global markets. So they've really done a lot of work. Our applications are submitted, the audit is done, and we're aiming for the end of Q1 of next year to get our exchange and CSD license from FINMA. And we really appreciate the partnership with FINMA. Hopefully this will show the way to other jurisdictions around the world to get to this level of advancement. And hopefully show the way for other FMIs to get into this space as well. So that's, you got your regulated status, but then now let's switch to CBDC, a huge topic. I've been on many panels about this, and there'll be many more. It's certainly the topic du jour this year. I was really excited to start Project Ubin and Project Jasper back in the days when I was running R3's lab way back in 2016. So we've been talking about CBDC with central banks for a long time now. Now we're working with the Swiss National Bank on the real deal. We've implemented some proof of concepts. They're a bit more than that. They're actually near production grade. And we're working now with the SNB on where we go from here. But crucially, it's all about the roadmap to real implementation and real launch, real use of CBDC, in this case in the Swiss franc, using our SIX digital exchange infrastructure. And I'll talk more about some of the work we're doing with the Banque de France in a second as well. So we've got our tech stack, we've got our licenses, we're working towards central bank digital currency to allow us to do digital asset versus payment. Now, crucially, we need digital assets. All this talk, and we haven't really talked about the assets themselves. Now, products on one side. Clearly, We don't think the bond market's going to go digital tomorrow. We don't think the equity market, even less likely that the equity market's going to go digital tomorrow. But there are customers, there are issuers, there are banks who want to operate in this space, and it's a good entry point to getting into this new infrastructure. So we're looking at bond structures and loan structures, debt structures. We're looking at equity structures, maybe private equity, private placements, maybe small to medium sized enterprise equity, SME equity. We're looking at fund structures, funds of tokens or tokenized funds. Network as a service, that unregulated infrastructure, and structured products is a great example. Now, this isn't exhaustive. There's many, many types of assets we could get into, but this is a good start. Right? These are the products that we're looking at Six Digital Exchange, working with our various international and national, domestic and international clients. And crucially, when we do that, we need to get commercial value out of them. This isn't just for fun. We have to make a sustainable business out of the business that we're building here. So if it's got commercial value, if it requires that crucial, hard to get FMI license, it gives us the right to win. And we have something called a Tiger team within our group that actually works directly on client activity with the client. So that's what we're doing. These are the assets that we're aiming to put in place. Now, I want to give you one specific example of this, digital bonds. Now, you look out there in the market, you will see that there are lots of institutions talking about issuing digital bonds in various forms. I think one thing that's really important is when I say digital bond, I'm talking about a native, true digital asset. This means it's a digital asset that is created in tokenized form on a blockchain of some sort, and then can exist as that asset and move around and be operated upon and have the automated smartness embedded into it, right? That's a true digital asset. A digital representation of a traditional asset is not really what we're talking about here, right? And a lot of the post-trade automation, and people call it digital bonds, I would argue it's not really a digital bond. A digital asset, a true digital asset, where the root came from its cryptocurrency, beginnings back in the late 2000s. That's what we're talking about here. So a digital bond. We are working with Swiss issuers, Swiss banks, and Swiss buy-side participants at the potential to do a full end-to-end, significantly sized digital bond issuance in 2021. That will be truly new. That will be truly significant, a step for institutional capital markets. We will have issuers, big investment grade corporate issuers, frequent issuers who issue billions of Swiss francs of corporate bonds every year. We'll have a significant issue size. It won't be in the tens of millions. It will be more like 100 million plus. So it should make its way into a bond index. So it's this real market, real issuance and real size. We'll have lead syndicate managers, the likes of UBS and Credit Suisse that I mentioned before, but other large banks and cantonal banks in Switzerland. We'll have the custody banks involved, and we'll have the buy side, the likes of your Swiss Lives and your Swiss Re's, and the asset management units of the banks. Now we're talking about an institutional marketplace. Now we're talking about not something that's issued within one entity and sold to the other entity in the same group. We've seen a lot of that, valuable steps. But this is the next step. This is end-to-end listing, trading, settlement, custody at institutional level with institutional players along the full value chain. Very exciting. This is something that we're working on, and look out for that to happen in 2021. I also want to talk briefly about the Banque de France. This is all public news. The Banque de France had an RFP earlier this year. We came together with this fantastic group, coordinated by Accenture, working with our Swiss bank counterparts, UBS and Credit Suisse, working with Natixis, crucially, who's the French bank, Commerce Bank, also, who've been very, very forward in this digital space and have a French entity as well. And also, crucially, working with R3 Digital Asset and SAP on the technology side as well. All of us looking to do one new element, and there are a number of groups. I'm excited to see what all these different groups come up with. I think there may be 8 different groups. We're just one of them, but we've got a trump card, which is we're hoping to do central bank CBDC Swiss franc versus central bank CBDC euro. That's something we're actively working on. We're working on the design with our partners. Look for that to happen early next year as well. We all have this work going on in different jurisdictions. I mentioned Project Ubin, which I had the honor of starting with the Deputy Prime Minister of Singapore and Ravi Menon, the head of MAS, and Sapnendu Mohanty, the head of FinTech at MAS in Singapore 4 or 5 years ago. But we've got to look beyond single jurisdictions. We've got to look beyond Jasper in Canada and these other projects. We've got to do cross-border CBDC. That's how we're going to unlock the global liquidity for the marketplace. Now, one thing I do want to mention, we're obviously very proud to be a part of the Global Blockchain Business Council, which also has the Post-Trade Distributed Ledger Group. But we at SDX are involved in many different organizations, and I think that's really important. And a lot of these organizations are members of each other and talk to each other, which is as it should be. We're a member of the Chamber of Digital Commerce. We're working with the World Economic Forum. We're a member of Global Digital Finance, Hyperledger. R3 is a really important partner to us, and we really love working with them, and hi to all of my R3 colleagues out there. ISA, Enterprise Ethereum Alliance, and OMFIF, we just joined as well. These are important institutions. The one I will highlight, though, is the Interwork Alliance. I'm also on the board of directors of the Interwork Alliance. Why is that important? Because everything I've just talked about won't work if we don't get standards together and we don't all talk the same language. That's what the Interwork Alliance is designed to do. Many of these other institutions, organizations are a part of Interwork as well. So my call to action for all of you is get involved with us at the GBBC, get involved in all of these organizations, because we've got to have the dialogue about where we take this marketplace and work together on it. If we all do it in our own little silos, we're never going to get there. So I'm going to finish with a few ideas before we go to Q&A. I get asked a lot of these questions a lot. This is the first time I've done a sort of public presentation for quite a while, and probably won't do one for a little while yet. So I want to use this opportunity just to kind of highlight some of the things which I think people are talking about, and you know, I have opinions on them and I'd love to share them. Firstly, FMI versus DMI. Now, I will admit that we made up DMI, but I think that we think DMI should stick. We need to make a distinction between the current financial market infrastructure and digital financial market infrastructure. We call it DMI, digital market infrastructure. So that's when we talk about that next generation, that next level, we're going to use the term DMI because we think it's the right way to describe things in this new space. So that's FMI versus DMI, digital market infrastructure. Now, secondly, crypto assets versus institutional digital assets. So I am also, for full disclosure, I'm the chairman of a fantastic company called Apex E3. We work on data and order book aggregation in the crypto space, and actually across all assets, but we've done a lot in crypto to start with. I'm also an advisor to Talos, who are building infrastructure for institutional crypto asset activity. So I understand this space. Now, be clear, SIX Digital Exchange is not in the crypto business right now. We're not planning that at this point, so I want to make sure everybody knows that. But there is a key difference: crypto assets versus institutional digital assets. Institutional digital assets is what I described before. This is your equities, your bonds, your structured products, your funds, maybe even non-bankables, real estate, etc. This is institutional capital markets, not crypto assets, which are a very different breed. Institutions are moving in that space, and let's see how that pans out over the next couple of years. But these are very different marketplaces, and some of the infrastructure is common and some of it is not. So I'm making a very clear distinction between the two. I want to say it publicly. I don't have anything against crypto assets. I don't have anything against the growth of that market. I think institutions will move into that market, and SIX may well do that at some point in the future. But for now, we're not focused on crypto assets today. But if the institutional demand is there, we'll move in that space. Public versus private, one of the age-old debates, and people do love to get into these debates, maybe less so these days. The good news is I think people are recognizing that the distinction is a little pointless. I think we need to worry about what's secure and what's trusted rather than what's public and what's private. And there's a lot of very exciting work going on in the public space as well as the private space. And I would anticipate that SIX Digital Exchange would absolutely be engaging with public markets and the decentralized space, as it's called, DeFi. And we'll talk more about DeFi in a second. So I do not have a strong feeling about public versus private. I think getting into that debate is a bit of a waste of time. Let's use what works. Let's use what gets us to the next step. If it's public, great. If it's private, great. They will interact. It'll be networks of networks, and they'll all be of different flavors in different jurisdictions, but let's connect them all up. So let's maybe stop debating public versus private, like one is better than the other. Let's debate what's better for customers more than anything else. I want to mention sustainability. I do think we have an obligation in this century to really think about green, eco-friendly initiatives that drive that in the marketplace. Digital assets and DMI actually affords us a very interesting opportunity to work in things like carbon credits and green bonds, and there's other assets as well in the energy space as well. It's really important that we all moved in that direction. So I'm highlighting sustainability as something that we're going to focus on, but also everybody should focus on. And our infrastructure really does help us get to a better place there. Now, here's my final point. This may be controversial to some people, but I think it's an important point to make, especially in the age of COVID, as we all hit a reset button going into this next decade, the roaring 20s. It was supposed to be the roaring 20s, didn't really start that way, did it? So, will the real DeFi please stand up? DeFi stands for decentralized, finance. And what does that really mean? Well, it's a technical term. It's decentralized versus centralized. There's this notion of open finance, which is also the general theme here is about making things better and making things more accessible and open, right? And everyone have their own definition of what DeFi is. I think DeFi was misspecified out of the gate. And to be crystal clear, I have zero issue and actually embrace decentralization as a concept. And I think we will use it and we need to use it. It creates very powerful mutualized infrastructure, and disintermediation is not a bad thing. Allows us to get to a better place. But it's a means to an end. It allows us to get to a better place. Let's define the place we want to get to rather than the way we're going to get there. The thing we want to get to is not decentralization. Decentralization doesn't get you anything on its own right. It must offer you something else. Open finance, yeah, things being open is good, but what does being open get you? And centralized, there's this notion of centralized infrastructure being the pariah in some eyes, I think is nonsense. That there's a lot of decentralization already going on in capital markets today. Just people don't like to admit it. So there's degrees of this. What's really important is where we're getting to, not how we get there. The real DeFi is democratized finance. DeFi, democratized finance, a better future for corporates, governments, and individuals. Better defined in any number of different ways. I'll let others define that, but better is better. Better is the right way forward. Democratized feels like the right end state. Decentralization might help us get there. Open finance might get there, and centralized infrastructure definitely is going to help us get there. Let's get to democratized finance as an end game. So with that, I will get off my soapbox. I will stop sharing my screen. And I think we've got 5 minutes, and very happy to dive into a few questions. Sophia, how are we looking?
We're looking good. We've certainly had a few questions come in. So Tim, I'll start off with the first. It says, thank you, Tim. So great to see you here. As you say, tech, business, financial services are all intertwined. What is your thought about big tech entering financial services space and potentially dominating?
That's a great question. So, when we look at the world from a traditional FMI as SIX is, we see two forces. One is our incumbents who are with us, who are looking at doing this, and look at what ICE has done with BACT. That's probably the most significant other effort in this space. And we look at them as a classic. We have to look at our peers and say, where's the competitive threat? But to the point that was made by the attendee, there's also the new guys, and actually I would put that into two categories. I'd put it into the crypto, the Binances, the Coinbases. I mean, Coinbase is going to do an IPO. We may see them being in a very strong position to move into the institutional space. But then you've got obviously the likes of Amazon. You've got, you know, Ant Financial. You've got all these other large sort of what some people call tech fins instead of fintechs, where the tech was where it started. What is my thought? My thought is I wouldn't be surprised if we continue to see that trend. My thought is the way in which they build infrastructure is more akin to what I described at the beginning of the presentation, really knowing what a multi-sided platform looks like. Those guys know this. We don't. Financial services has been very adversarial. It's stuck in a capitalist mode that really was in the mid-80s, this sort of shareholder primacy mode, which means you get very adversarial very quickly. Certain other industries, and particularly the pure tech industry, figured this out a long time ago. A rising tide lifts all ships. So what do I think about it? I think they potentially could dominate. I would love to partner with them instead of fighting against them. I think they have an important role to play, especially when it comes to B2C. So I don't think we could really ignore anyone at this point. And I hope they make advances that we can all take advantage of and build infrastructure we can all take advantage of. Are they a competitive threat? Definitely, definitely. So there's that one, Sophia.
Absolutely, thank you. Okay, next question. Somebody asked, several global exchanges and banks have delayed their blockchain initiatives. Did they do too much too fast? Do you have to embrace this idea of betting big and trying to capture the first mover advantage?
You know, I was talking with another exchange the other day, and they sort of used this term "last mover advantage," which is a bit mystifying to me, actually. So look, the financial services as a whole, and look, I've been working with financial institutions for the last 5 years trying to figure out how to do this. Everything's going to move slowly. If everybody made that big bet and tried to be the first mover, we'd have a different problem. Different institutions have their decision making at different paces. They have different stakeholders with different requirements and motives. So I'm not surprised we see this big spectrum. Now, the thrust of the question was, did some of them move too fast or too soon? Maybe. I mean, look at the ASX. We really needed the ASX to do what they did, right? But arguably they moved very quickly. They've changed their road a lot. Things are taking longer than expected. They always do. That's been true with SDX as well. So I have sympathy for that. But if they hadn't done that, and if Libra hadn't done what Libra had done and these big movers, then we wouldn't be moving forward. So everybody needs to do this. Look, the real way to establish whether what we're doing at SDX is too big and too soon is whether we succeed, and it's my job to make it succeed along with my 140 colleagues around the world, and that's what we're focused on. We need some people to be early movers, and with that comes mistakes, failing fast, trying again. But as long as you have that sort of entrepreneurial mindset to building big infrastructure, then we'll get there. I applaud any institution that chooses to invest and really push into this space and take the risks, because otherwise none of us will get anywhere. So I think it's a big spectrum, Sophia.
Absolutely. You do have to embrace that mindset. So somebody asks, Charles asks, how do you see price discovery and diligence panning out for newly digitized assets?
How do we see price discovery and diligence panning out for newly digitized assets? So that's actually a great question, Charles. And the answer is we want to be a piece of that puzzle, right? So price discovery, we're building an exchange, and that the whole point of an exchange is that we want to discover prices. It's a marketplace for market participants to engage and figure out where things are priced. That's the mechanism of an exchange. So we at Six Digital Exchange are going to be just that, a piece of the price discovery. Now, the diligence is an interesting question. Everything we do, especially in the early phases of what we'll be doing at SDX, is going to be institutional. So it's going to go through the same level of scrutiny of AML, KYC, and all of the appropriate regulatory and compliance elements that you need for a big institution like a UBS or a Credit Suisse to trade with you. So all of that's built in, and that's frankly why it's taking so long. It takes long because that infrastructure is difficult to build out. You can't just knock this up over a weekend. It takes a couple of years to build out that infrastructure. So where it gets interesting, and to your question, Charles, is what happens when you get into other assets. And particularly, what about crypto is a good example. What if we start trading crypto for institutions? How are we going to figure out that we get the diligence right, the AML, the KYC right? And there's lots of really great work going on around the world with different startups, different companies looking to figure out how Chainalysis is a good one, or Luca in the US doing great work, trying to help with accounting and making sure we get the diligence right. So we're a part of the infrastructure, but we need all these other pieces of infrastructure to come together in one big networked group in the ecosystem so that we can make sure we get all the right price discovery and due diligence. And by the way, when I mentioned global liquidity at the beginning, that was really important. That's when you get the best price discovery, when you've got more liquidity.
Great. We also had somebody ask a question about central bank digital currencies. They asked, do you anticipate European central banks to issue wholesale CBDCs before a retail CBDC?
That's an interesting question. Look, I mean, we look at what's going on in Sweden, which is arguably more of a retail focus. What we're doing in Switzerland is more of a wholesale focus today. What was going on in Singapore can be argued to be a bit of both. You know, it depends where you start. In the EU in particular, I personally would be surprised if we go retail before we go wholesale. That's my own view. I think that we can help in the wholesale space because there's fewer players. It's much more robust. You have to worry less about investor protections when you're in the institutional space because everybody's grown up, and you need to, you can do it. And, this infrastructure is built to be robust, secure, and regulated. I think that's what comes out first, and then that allows us to move down. But I do think that the blurring of the lines between retail and wholesale is going to get increasingly large. When you aggregate a lot of retail, it starts to look wholesale. So my bet, and it's just my personal bet, is that we see retail first, wholesale first and then retail. But then, who knows? There's always different jurisdictions. I mentioned working with the Banque de France, other jurisdictions looking at it too. Really, we need to get harmonized. I think my core message on CBDC is let's stop doing things in jurisdiction level and let's start doing things on a global level, because that's how we're going to get to the promised land.
Absolutely. I don't want to run too far over time, but somebody said, this is not a question, but rather a compliment. Fantastic presentation. And I think everyone who was able to attend today can say it's been an absolute privilege to have you present, and that you so clearly and concisely explained what SDX is doing and kind of how it fits into these broader, big ideas. So thank you, Tim. We will share a recording of this presentation with everyone who was able to dial in, as well as those who weren't, and links to learn more. Thank you for taking part in the GBBC Virtual Members Forum. We so appreciate it.
Thanks everyone for joining, and stay safe and stay sane out there, everyone.
Thank you.